All right, Brittany. So today we're talking about one of our favorite topics at Brandywine Oak, giving money to charity. Most of the families that we work with are incredibly generous. The challenge is often they don't think about the most tax-efficient way to give their dollars, their hard-earned dollars. Let's start at the top. What is a donor-advised fund?
So at its core, a donor-advised fund is essentially a charitable investment account.
Okay.
It allows you to make a contribution, take an immediate tax deduction in the year it's funded, and then decide later when and where you want to give money to charity. It's the flexibility of this that makes it a really powerful planning tool.
And that's a big distinction, right? So you're almost separating out the giving decision from the tax decision. So how does it actually work in practice?
So when someone contributes to a donor-advised fund, they can use cash, but we often recommend that they use highly appreciated assets, such as a stock or a mutual fund that's done really well.
Okay.
When they donate these assets in kind, it allows them to avoid paying the capital gains tax, and the charity gets the full value.
Okay, interesting. And that's a huge win. So you're avoiding paying the capital gains tax entirely and kind of doing what's left after taxes. You're basically avoiding that capital gains tax in full.
Exactly.
Okay.
And once the account is funded, it doesn't just sit there in cash, it gets invested, which allows it to grow tax-free in that charitable account.
Okay, so if I have Apple stock that has a big capital gain and I give it to my donor-advised fund, it's sold in the donor-advised fund or stays Apple stock?
It's sold in the donor-advised fund.
Okay.
Your account is funded, and then you invest it based on your own objective.
Okay, so I control the investments in the donor-advised fund.
Exactly.
Oh, I like that. Okay.
Exactly.
Okay.
Then when you're ready, you can recommend grants to your favorite charities over time.
So you don't have to give it all in one lump sum to one charity.
No, you don't. That's the beauty of the flexibility of it. You have the choice to decide when and where you want to give that over multiple years.
Okay, got it. So you can, in essence, Brittany, front load the deduction in a high income year, for example, and then kind of control when you dole that money out to charity over the next however many years, correct?
Exactly.
Okay, got it. Let's talk about convenience next. I think this is something that a lot of people underestimate.
Donor-advised funds make giving to charity incredibly easy to manage. So either through an online portal or a mobile app, you can track your giving history, you can recommend future grants, you can even get your children or grandchildren involved in giving. It really makes philanthropy feel intentional rather than reactive.
Okay. I guess you'd also have tracking or records of this sort of thing. If I give $5,000 to my church, oftentimes clients will say, I don't remember if I gave that already this year or not. Did I do my tithe for the year or not? I guess they'll have a tracking or record of it on an ongoing basis?
Absolutely.
Okay, so that makes it incredibly convenient. Another feature clients seem to find very attractive about the donor advised fund is privacy. So how does that work?
Absolutely. So donors can remain anonymous while they still have complete control over the investment strategy within the fund itself. It gives flexibility, discretion, and simplicity all in one place.
Okay, so if I don't want to be solicited by, a charitable organization for additional donations, I can give from my donor advised fund and be totally anonymous?
Absolutely.
Interesting. Okay, that's very different than giving cash to charity.
Yes.
Got it. So when we zoom out, Brittany, the donor advised fund is almost about more than just giving money away, right? It's almost a tool to use in your broader strategic plan.
Exactly. When aligned properly with your tax strategy and financial planning, the donor advised fund really allows you to maximize impact while still being a good steward of your wealth.
I guess oftentimes even lightening up a concentrated stock position, for example. So you can almost use it to avoid capital gains tax from that perspective as well.
Absolutely. It has multiple tax benefits.
Okay, terrific. If you're already giving to charity, a donor advised fund is a tool that's absolutely worth exploring. But like always, be sure to check with your tax and financial professionals before opening a donor advised fund.
And we're always happy to help walk through whether this tool makes sense for your specific situation.
Like always, we are here to help. If you have any questions, feel free to reach out to us to get started.